Hi, I'm Dong Xiong. Welcome to Digging into China, where we explore China in depth to reveal unique perspectives. Let's talk about China's social financing data from February. If we look at the credit changes for households, it's clear that domestic consumption is shrinking. Every year, the State Council puts out the documents to boost spending. Some years, they release a bunch of them. You can check out the State Council's website. Just search consumption and see what they published over time. Now, usually these Communist Party documents are full of big slogans and promises that nobody takes too seriously. But this time, they dropped another one aimed at pumping up consumption. It came out on Saturday, March 15. Here is the wild part. The Asia stock market reacted the day before on Friday, March 14th. Consumption and the financial stocks shot up. It's like someone got a sneak peek and started betting big on consumption themes. Insider trading. In China's Asian market, that's not exactly shocking. Some folks always seem to know things early. The stock market's reaction hints at China's game plan for boosting spending this year. It's got two main plays. First, they are pushing consumer finance, letting people borrow more to spend. The Financial Regulatory Authority tipped us off about that recently. Second, they are doing trade-in programs for old consumer goods backed by government subsidies. That's why financial and consumption stocks suddenly took off in the Asia market. On another note, cities across China are starting to offer birth subsidies. Take city of Hohhot, 10,000 yuan for your first kid, 50,000 for the second, and 100,000 for the third or more. Pretty generous, right? Most of us haven't seen anything like this before. The State Council's new document even highlights these subsidies, and it's sparked a boom in baby-related stocks. On Friday, March 14th, over 20 of those stocks hit their daily limits. So, what's going on here? Is this just the market hyping things up for a quick buck, or is the Communist Party actually serious about improving people's lives this time? In this video, we are digging into the State Council's latest plan to boost consumption and compare it to what they've done before. This year, on March 16th, the State Council released a special plan with 8 measures and 30 detailed steps to get spending going. We've talked a lot about why consumption in China is weak. The core issue, the way wealth is split up. Regular folks get too little of the pie, so they don't have much to spend. If the Communist Party really wants to fix this, they've got to figure out how to put more money in people's pockets. For years, their documents dodged this completely. I even double-checked last year's Central Economic Work Conference report. It's still up on their site. They wrote a big policy breakdown about improving the shopping vibe, pushing trade-ins, and trying new consumption ideas. But how to get people cash to spend? Not a word. This year's different though. The new document's first big measure is all about raising incomes for city and the rural folks alike. How? They've got 4 ideas. First, they want wages to grow fairly. The real move here, hiking the minimum wage, looks like that's going up this year. Second, they're telling people to make money investing, especially in stocks. They are promising to keep the stock market steady. The party's basically saying, hey, trade stocks, make cash and spend it. The government's got your back. Will people buy it? Seems like a lot will. I keep hearing folks bragging about their Asia wins lately. The Asia market's been hot, no doubt. But here is what gets me. For years, people get crushed in that market, losing to the party's games. After all those wipeouts, why do some still think they'll strike gold? With a stock, you don't know if you've won or lost till you cash out. So good luck to them. Hope the market keeps soaring and the party starts sharing the wealth instead of trimming investors like weed. Third, they want to boost farmers' income. Same old tricks, innovate in farming, free up rural land deals for some profit. They've tried this before and it flopped. Will it work now? We'll see. Fourth, they are tackling business not getting paid on time. Practical, sure, but tricky to pull off. The governments flagged it, but they need tough follow-through to make it stick. What I really care about is how the party is going to lift people's paychecks. Truth is, this document talk about it, but it's still mostly hot air. Raising the minimum wage might actually happen, but the rest, tough to see it working. Take the stock idea. Who's got the cash to play the market? Mostly the middle class and up. Out of 300 million migrant workers, how many can afford it? And if you borrow to trade, how many qualify for a loan? Plus, the market's risky. Bank loans are under 3% now. Buy a stock like ICBC with 5 or 6% of dividends, and you could profit if the price holds. But ICBC is at the record high. Who's promising it won't crash? That's the gamble. To get people spending, it's not just about income. Welfare matters too, and the party is being slow there. This time, there's a step forward, those birth subsidies. They floated the idea last summer, but it's finally happening now. City of Hohhot's late to the party, but better late than never. Last year, the party was stingy. Some cities gave cash for second or third kids, but zero for the first. The thing is, first-time parents need help most. Families with 2 or 3 kids usually have money. They'd probably have them anyway. This year, Hohhot's giving something for the first kids. It's less than for the others, but it's a start. Migrant workers are getting maternity insurance too, which I am all for. In hospitals, you hear about migrant moms giving birth and bolting the next day. No money for the bill. Hospitals see this every year. If insurance can cover them, that's huge. But let's be real. The party's only doing this because the birth rate's tanking and a population crisis is looming. If they weren't desperate, they won't bother. Look at the pensions. At this year's 2 session, Lee Chang said that they are bumping the basic pension for urban and rural folks by 20 and appropriately raising retiree pensions. Appropriately. What's that mean? Ask retirees. They get hundreds more a year at least. Some insiders get way more with their fat-based pensions, tens of thousands. Here's the system's flaw. Why boost those already raking it instead of helping farmers scraping by on 100 yuan a month? Give them 500 or 1,000 more. That's real help. It boils down to this. The party thinks pensions aren't as urgent as births. Babies are the nation's future. Old farmers, not so much. They won't dish out the benefits unless it's do or die. Taking cash from the system's insiders, good luck with that fight. The rest of the document, less exciting. Stuff like AI-driven spending, more trade-ins, pushing snow tourism, sports trips, even paid time off so people can shop. They are even taking spring and fall breaks for students, extra holidays for family spending. But none of that's core issue. It's about cash in pockets, hope for tomorrow, and a willingness to splurge. Without fixing income and welfare, cheap loans won't tempt folks to borrow. And that brutal competition from schools to jobs won't stop just because the government says no overtime or no extra classes. Remember that the Huawei mess, their tech hiring turned into a bribe fest. Pay the bosses, let them skim your salary, and you are in. Why? Jobs are scarce, talents everywhere, and openings are few. That's how executives cash in. If jobs stay this grim, the rat race won't quit. Ban extra classes or overtime, and the schools and the companies will just find workarounds. Policies up top, tricks down below. When Xi Jinping smashed the tutoring world, did extra classes stop? Nope, went underground. The need didn't vanish. To fix the spending slump, these shallow fixes won't do. The party needs real moves, more jobs, tackling the big burdens, children's schooling, old parents' care, mortgages, healthcare. Forget splashing cash on trade-ins or bump up GDP numbers. Subsidize people, ease their burden. It's basic. Rethink how wealth is shared. But that hits the bureaucratic system's big shots, the ones making the rules. Asking them to give up their slice, nearly impossible. Still, this year's got a tiny spark. Birth subsidies are getting serious. Just hope it's not another flop. City of Hohhot's third kid deal, 100,000 yuan over 10 years, 10,000 a year. Sounds nice, but what if funds dry up after a few years? Lots of Chinese worry about that. Local governments here have a habit of bailing when it's time to pay up. That's why I think the best subsidy would be this: 200,000 yuan interest-free loan for your first kid. Second kid, repay 100,000 less. Third kid, the loans wipe out. You get the cash upfront, no stress about the government stiffing you. I'd love to see rich coastal cities try this. Give people real peace of mind. Thank you so much for watching. If you find this video helpful, please like it or drop a comment below and hit the subscribe button right here. It really helps YouTube suggest my video to others. I'll be back with more content soon. Until then, be well.